Nvidia has been one of the most explosive stocks in recent years, driven by the AI revolution, gaming demand, and the booming data center industry. But with its stock soaring to record highs, many investors are starting to ask a crucial question. Is Nvidia's growth story still intact, or is the stock reaching a breaking point? The company has been at the forefront of technological advancements, supplying the most powerful AI chips to industry giants like Microsoft, Google, and OpenAI. However, with rising competition, economic uncertainties, and concerns over its steep valuation, Nvidia's stock is at a crossroads. Some analysts believe it has much more room to grow, fueled by the ever-expanding demand for artificial intelligence, while others warn that it may be overvalued, making it vulnerable to a correction. The stakes are high. Investors who get this decision right could see substantial gains, but those who miscalculate might find themselves caught in a tech sector pullback. So, what exactly is going on with Nvidia stock right now? Let's dive deep into the factors driving its price movements, the risks it faces, and whether it remains a strong buy or a potential trap. Nvidia has been one of the most talked about stocks in recent years, with its meteoric rise driven by artificial intelligence, gaming, and data center demand. But lately, investors are asking, what's going on with Nvidia stock? Is this just another phase of rapid growth, or are there warning signs that investors should be cautious about? With recent market volatility, shifts in AI development, and increasing competition in the semiconductor space, Nvidia's stock is at a critical point. Some analysts believe there's still massive upside, while others warn that it may be overvalued and due for a correction. One of the key factors influencing Nvidia's stock is the ongoing demand for AI chips. As artificial intelligence continues to expand into industries like healthcare, finance, and autonomous driving, Nvidia remains the dominant force behind AI hardware. Its GPUs are considered the gold standard for training and running AI models, making it a critical supplier for tech giants like Microsoft, Google, and Amazon. This AI boom has fueled record-breaking earnings for Nvidia, with revenues from data centers skyrocketing. However, there is growing concern about whether this pace of growth is sustainable. As more competitors enter the AI chip market and companies look for cost-effective solutions, Nvidia may face increasing pressure to maintain its leadership position. Another major factor affecting Nvidia's stock is its valuation. Over the past year, Nvidia's stock has surged, reaching new all-time highs. While its earnings growth has been impressive, the company is now trading at a price-to-earnings ratio that some investors find concerning. High valuations can be justified when a company is growing at an exponential rate, but if there is any slowdown in revenue growth, it could lead to a market correction. Historically, tech stocks that experience rapid gains often go through phases of consolidation before continuing their upward trajectory. Investors are watching closely to see whether Nvidia can maintain its current pace of growth or if it will face a period of stagnation. Macroeconomic conditions also play a significant role in Nvidia's stock movements. The Federal Reserve's decisions on interest rates, inflation trends, and overall market sentiment all impact high-growth tech stocks. When interest rates are high, borrowing costs increase, making it more expensive for companies to invest in new technologies and infrastructure. This can lead to slower corporate spending, which may impact Nvidia's key customers in cloud computing and AI development. On the flip side, if the Fed signals potential rate cuts or economic conditions improve, it could provide a fresh boost for Nvidia and other tech stocks. Another area of concern for investors is competition. While Nvidia has a stronghold on the AI chip market, other players like AMD, Intel, and specialized AI chip startups are aggressively developing new technologies. Companies like Tesla and Google are also working on their own AI chips to reduce reliance on Nvidia's hardware. If these alternatives gain traction, Nvidia could see a slowdown in demand for its GPUs. Additionally, companies are looking at different ways to optimize AI processing, including software-based solutions that could lessen the dependence on high-end GPUs. While Nvidia remains the leader, the landscape is evolving and competition is heating up. Regulatory challenges also add another layer of uncertainty. The U.S. government has imposed restrictions on semiconductor exports to certain countries, particularly China, which has been a major market for Nvidia. If these restrictions tighten further, it could limit Nvidia's ability to sell its most advanced chips overseas, impacting its revenue growth. Additionally, as AI technology becomes more powerful, governments around the world are exploring new regulations that could impact how AI hardware and software are developed and used. While Nvidia has successfully navigated past regulatory hurdles, investors must keep an eye on potential policy changes that could affect its business operations. Despite these concerns, many analysts remain optimistic about Nvidia's long-term potential. The AI revolution is still in its early stages, and Nvidia is positioned to benefit from continued advancements in artificial intelligence, machine learning, and high-performance computing. Its partnerships with major tech companies and ongoing innovation in GPU technology make it a strong player in the semiconductor industry. However, the question remains, at what price does Nvidia remain a good investment? For investors considering Nvidia's stock right now, the decision comes down to timing and risk tolerance. If you believe in the long-term potential of AI and Nvidia's continued leadership in the industry, holding on to or buying shares may still be a good strategy. However, if you are concerned about short-term market fluctuations, waiting for a potential pullback before entering could be a safer approach. Nvidia has proven time and time again that it can innovate and stay ahead of the competition, but no stock moves up in a straight line. Investors need to be prepared for volatility and carefully assess whether the current price aligns with their investment goals. Looking ahead, Nvidia's future will largely depend on its ability to maintain its competitive edge in the AI and semiconductor markets. The company has already established itself as a leader, but it cannot afford to slow down. Competitors like AMD, Intel, and even tech giants such as Google and Amazon are developing their own AI-focused chips, aiming to reduce their dependence on Nvidia's GPUs. If these alternatives prove to be more cost-effective or powerful, Nvidia could face a decline in market share. However, Nvidia's strength lies not only in its hardware, but also in its ecosystem of AI software and development tools, which continue to make it the go-to choice for many companies. The challenge now is whether it can continue to innovate at a pace that justifies its premium valuation, while fending off rising competition in an increasingly crowded market. Beyond competition, macroeconomic factors will play a crucial role in shaping Nvidia's stock performance. The Federal Reserve's stance on interest rates, inflation levels, and the broader economic environment will significantly impact investor sentiment toward high-growth tech stocks. If the Fed keeps interest rates high for an extended period, capital-intensive industries like AI and cloud computing could see slower investment, which may weigh on Nvidia's revenue growth. Additionally, global supply chain disruptions, geopolitical tensions, and regulatory hurdles could create further headwinds. The semiconductor industry has always been highly cyclical, and while AI is driving unprecedented demand, external factors beyond Nvidia's control could introduce periods of volatility. Investors need to watch these broader economic indicators closely, as they could determine whether Nvidia's stock continues its upward trajectory